Hello. Welcome to the Wharton Global Youth Meetup Live Alumni Career Chat. I'm Diana Drake, Managing Editor of the Wharton Global Youth Program. Graduates of the Wharton School go on to do amazing things, becoming captains of industry, innovative entrepreneurs, and leaders in finance. The GYM Career Chat is an opportunity for all of you to learn about the professional lives of some of Wharton's successful alumni and to explore a variety of business and finance careers. Today, we welcome Vusal Najafov, a Wharton MBA with a multifaceted career in finance. For the next half hour or so, we'll be talking about Vusal's work and professional choices, and we'll reserve 15 minutes or so at the end of our session for questions from all of you. Please feel free to post your questions at any time. Vusal is Managing Director and co-head of Cowen Sustainable Investments based in New York City with offices around the world. He oversees strategy, investment selection, and portfolio construction at the company and has 20 years of experience investing across sectors and asset classes. He focuses on the application of data analytics in renewables and storage, clean transportation, sustainable agriculture, and industrial efficiency. Saul, thank you for joining us today. I'm very intrigued to learn more about what you do, so let's jump right in.
Great. Thank you for having me on board.
So help us better understand first the world in which you operate. What is Cowen Sustainable Investments? I know it's part of a larger company, Cowen Inc. And what specifically does a cross-asset investor in sustainability do?
So I guess the world that I operate in is an intersection of several things. Number one, it's an intersection of technological disruption. So there are all these different technologies that have been created to solve some of the world's biggest challenges. And the biggest challenge that we're working on is climate change. And to address climate change, there are multiple clear solutions, such as renewable power, electric vehicles, and really various other types of new technologies that have evolved. And those technologies have evolved because scientists and engineers have worked for many years to really perfect those technologies, first in labs and then in prototypes. And then there was initial funding from governments and private sectors to take those to a point where millions and tens of millions of people and more can start using them, adopting them. Where we come in is at the stage where those types of technologies have already been deployed, and we're really helping companies that are still new companies to go from a stage where they only have less than 1% market share to dominate the whole market, meaning that what we want to see is electrification, renewable energy, and other sustainable technologies to be everywhere and to become a standard. And what Calan Sustainable Investments does is it enables companies like that to go from kind of point B, if you will, to point C. And we do it by really providing three things. Number one is we provide capital. So we're investors. We have capital from large institutional investors, such as pension plans and insurance companies, universities, and what we do is we take that capital and we invest in companies that we think are pioneers within sustainability. Number two, we have our own team of data analysts and software professionals, and we effectively utilize that team to help these companies accelerate and grow much faster. And number three, we focus on how else we can help these companies with connections to industry leaders and really strategic partnerships so that we could really scale. So it's a combination of finance and technology or data analytics.
Fascinating. So before you get too far into what you do specifically, can you give us an example of a company that you work with?
So a great example is our first investment. So we made a $200 million investment in this company called Ecoatm. And what Ecoatm does is it basically creates a very easy platform for consumers to sell their used phones and other electronic devices. So either one can go online or one can go to Walmart, Kroger, or many of the 4,500 locations And Ecoatm basically built a ATM-like machine. So picture it's like a regular ATM-like machine. You can insert a used iPhone 5, let's say, and within seconds, that machine basically establishes the value for the phone and offers cash for that phone. And the idea is to really bring tens and hundreds of millions of phones that otherwise actually haven't been purchased back. They're just sitting in drawers and are effectively wasted. And eventually they end up in a landfill. And hence it's a pretty damaging to our environment. And instead we're producing, again, 1.5 billion new phones per year. So the idea is, how can we take more sort of used phones that may not be well functioning but are still quite valuable? How can we fix them up, and how can we actually sell them back to customers that would love to have, let's say, a used iPhone versus buying a sort of more expensive new phone?
Very interesting. Give us a snapshot of where you fit into all of this. Can you give us kind of an idea of what your day looks like?
Yes, so my day is a combination of working with existing investments and evaluating new investments. So with existing investments, we have a company that's basically in multiple countries. We're in US, Canada, UK, and Germany. We have thousands of operating kiosks that recycle or recommerce. So we buy millions of phones per year, right? So the first thing we're doing, in addition to, again, in investing, what we do is we work with the management of the company day to day. So we have calls with CEO, CFO, Chief Marketing Officer, and the team, and establish the strategy. So how are we going to take this company from 5,000 locations to 50,000 locations? Which countries are we going after? Which partners are we going after? Where should we actually precisely install the kiosks? And this is where our data analytics and software platform comes in, because we basically have built something that can take large amounts of data, analyze the data, and effectively come up with very clear objectives, very clear results on where exactly can we locate these kiosks so that we actually capture the largest possible number of customers and we can purchase the largest number. So it's a combination of working with company leadership on strategy, on what to do, and combination of analyzing the data from the company, looking at the results, building simple and sophisticated kind of statistical models, and using those to really decide where to locate new assets, and then also deploying new machine learning based models in the business processes itself, because now that once you deploy the kiosks automatically make decisions, right? So there are millions of data points coming in, and you need software that needs to effectively get better and better the more data we have to process. And it's really establishing, how do we build those models? How do we help the company deploy those models? Who maintains them? The whole process around having hundreds of people interact with each other is part of the equation. The other part of the equation is, what else do we fund? We look at hundreds of different companies. We constantly, so just now I had a 2-hour call with one of the largest charging station companies. So this company is in Europe. They've installed tens of thousands of charging stations, and are trying to go from tens of thousands to millions, because Europe is trying to convert to electric transport as fast as possible. So that's an example of something that we ask a lot of questions to the management and try to understand, is this the right company? Is this the right strategy? Will the company be able to be successful, not only from environmental and sustainability perspective, but of course from economic perspective, right? Would this be a good investment for our partners, and what we can do to help the company accelerate growth. And we only make less than 1% investment, so we have to talk to over 100 companies to make one investment.
That's incredible. Your day is very busy.
Yes.
Yeah, so the Wharton Global Youth Program runs an annual investment competition for high school students. And many teams love to build their investment strategies around environmental, social, and corporate governance factors. So it's sort of something that they've embraced. And I thought maybe we could zoom out a little bit. And could you just talk a little bit about how robust the field of sustainable investing is? And also there's a lot of language around this. So there's ESG, there's sustainable, there's impact investing, there's socially responsible investing. Are they all kind of part of the same world?
Yes, so it's yes and no. Where it is the same part of what's really happening is multiple things at once. On one side, we have the world's biggest problems like climate change, and also other problems like social issues and so on, right? So there's a large number of people that like to specifically address specific problems and specific issues that are not economic. So that's definitely happening. Parallel to that, what's happening is technology is disrupting the way we do things because technology has created something that's better. So, for example, solar power is better and cheaper. Electric vehicles are better and cheaper. And so you have all these new technologies that actually are disrupting or changing the way we have been consuming energy, transportation, food. Food is another area where we have a lot of waste because of plastics and plastic packaging. So that creates actually a very attractive investment opportunity. Because if you understand the changes to the energy markets, then you can actually create a way to make money, not just address one of the world's biggest issues, but also create a very attractive fund for our partners to make money. So what we have tried to do is put those two together. We tried to say, how do we actually pick an area where we think we can have the biggest impact and the area where we can have the biggest economic returns at the same time, right? And we realized that if we focus on environment, and within the environment, we're very focused on businesses that we believe will be very profitable or are already profitable but will be much bigger, and we have a very clear way of helping them, become bigger, faster, because we have our own data analytics and software capabilities, then we can actually not only give these companies capital, but accelerate them. So we have very clearly defined what we do, but the definitions are all over the place. There are definitely other investors that, let's say, strictly focus on social issues, and so on.
But it sounds like it's truly a robust area in which to work. I mean, the industry is growing.
The industry has grown very, very quickly. Just in the way we define what we're doing has gone from several $1 billion 10 years ago to over $500 billion per year today. And we still see substantial growth because we really are going after energy, transportation, industrial. It's how we manufacture things, how we actually bring food to the table, and how we sort of move around and what else we consume energy for. That is 40% of global GDP. So that's 40% of all the dollars circulating in everywhere globally that is being specifically disrupted by these technologies. So our view is that we're in the middle of a major transformation where really all of the energy is going to be sustainable and renewable within the next decade. All of the transport is going to be electrified, and there will be really substantial changes to how we manufacture things. We'll have circular economy where we'll move away from extracting things from the ground, using them, and then there's waste and lack of recycling, to more of a circular kind of economy where we will use a lot more of the used products, goods and products, and recycle them and reuse them to produce the products as well. So we're in the middle of that sort of a decade-long transformation, and we think that's one of the largest things, if not the largest trends within the investment universe.
Let's go back earlier in your career for a minute and follow the path. You earned your MBA with honors from Wharton in finance, statistics, and strategic management, and you went to work for Goldman Sachs. Can you talk a little bit about that decision? Why did you decide to work for Goldman? And maybe what was your biggest challenge starting out?
Yes, so it was actually a very difficult decision because while I was in business school, I was studying PhD level statistics. I was very interested in actually data analytics and statistics. And one of the paths was potential paths at the time was pursuing that and getting a PhD degree versus going and actually working for Goldman Sachs. So I ended up making the decision because I realized that what I wanted to do is take what I've learned and try to implement that directly and have an impact sort of more directly in the business world with sort of investments in companies. That's why I joined Goldman Sachs. And at the time, what was interesting about Goldman is really the breadth of some of the things that I could invest in. So it was really everything from mortgages to from mortgages and commodities all the way to companies. So I thought of that as a learning and training ground as well. So what were some of the challenges? Some of the challenges were, and they're more specific to MBAs, that undergrads. They're more actually, the difference between the graduate school and undergraduate is with a graduate education, one is joining an organization with experience. So once you actually have experience, you're not starting from scratch. So if I were to compare kind of the challenges I had then with starting from scratch and really having to catch up with others who have not gotten an MBA, that was a challenge at the first 12 months. But to answer your question, for my undergraduate experience, the first year of challenge, I actually started my career at Enron. And Enron was a very interesting company that really just pushed, it was really at the edge of innovation, as well as other poor accounting issues, which is why the company actually went bankrupt. It was the largest bankruptcy in US history at the time. But on the innovation side, it was very interesting training ground. And what I learned from both experiences from Goldman and Enron is, number one, when you're young and you're starting out, and it's really important to be open-minded. It's important to listen to people and solicit feedback, solicit advice, and really treat everything as a learning experience. And use trial and error as a way to learn. It's really, I think, is important to try as many things as possible and err on the side of being more aggressive than shy. Because these places like, large organizations like Goldman, they allow for that, right? So just like actually Wharton, it's a large organization with a lot of smart people who are very focused on accomplishing things. And they sort of appreciate people who are curious and they're trying things. And so, yeah.
Excellent. That's great advice. Help us understand how your career unfolded from Goldman. You've done so many things. How did you get interested in sustainable investing ultimately? But you also had entrepreneurial endeavors in there as well, correct?
Yes. So I have actually started a company called Environment, and this is a Canada-based company that focuses on clean water. So focuses on various techniques, and it's an intellectual property focused company. So a company that applies for patents and then uses those patents to really license them to various types of companies. So I guess the way I got to entrepreneurship was really more a function of seeing the opportunity. So I saw opportunities that I thought at the current job, at those jobs, I couldn't actually execute on. I thought the organizations didn't allow me to effectively pursue the opportunities, which I thought were much bigger than what I could do in that current role. So that led me to actually leave my prior job and start a new business. And the partnership with Cowen is actually still a continuation of the business I started back 5 years ago, where we basically decided to partner with Cowen and take advantage of a larger organization. Cowen is a 100-year-old company with over 1,000 employees, and that gives us a lot of leverage to really scale our business. But from a standpoint of why I wanted to build a business focusing on sustainability, is I basically saw this major change, and that change was that things like solar power, electric vehicles were no longer kind of science projects. There were actual real opportunities to pursue as an investor, as an entrepreneur, as a business builder. So then I thought, what are some of the things that I really enjoy doing? So I enjoy investing, I enjoy building businesses, and I enjoy statistics and data analytics and software. So how can I take those three things that I enjoy, put them together, and pursue a business that I like? And that's really how this business was created. And then in terms of what to pursue, of course, global climate change. Climate change is one of the biggest problems to solve. So why not pick the biggest, if not one of the biggest problem, or one of the biggest problems, if not the biggest problems, and really actually build an organization that can provide solutions to solve that problem.
Absolutely. Have you had to pivot in a time of crisis, either personal or professional, and how did you adapt to the circumstances and persevere?
Yes, starting a new business means that you have to be able to be adaptive, and you have to pivot, and you have to listen to feedback, right? So when you start your business, the first thing one needs to understand or have a strategy is, who is your customer? And what does your customer want? And based on sort of continuous interaction with a customer, one needs to create a product or service that basically fits the needs of the customer. So when I first started designing the strategy, my initial customer was an investor. Because to have an investment business, one needs to convince large institutions such as an insurance company or a pension plan that has hundreds of billions of dollars of capital why this investment platform is better than the other. And so that requires not only having the vision for why to build the strategy to begin with, but also having constant interaction with the customers, and based on the feedback from the customers, tailor how one would sort of go about the opportunity. So it was not a major pivot, but there were multiple changes to what exactly the product is, how we would raise the money, how we would deploy the money, how we would work with companies. The other major, I guess, relatively major pivot was that we realized that so many companies we talk to actually require data analytics solutions. And that's really was the whole idea of, can we actually build our own team of data analysts and help these companies with data analytics, was born from interacting with the customers.
Oh, that's very interesting. I mean, you had expertise in that area, and I would assume that it's given you quite an edge all the way through.
Yes.
Could you talk a little bit about the power of data analytics today within your industry, but just in general?
Yes. So, and this is where actually Wharton is particularly powerful, because unlike other schools, one of the things I learned is that statistics is actually part of the business school, and that's quite unique, right? And so I think that what has happened over the past 10 years is there's been a complete step function change, if you will, in the ability to compute, so in computing power, as well as in the amount of data we have, right? Over 90% of all the data we have is only 2 years old. And over 80% of that data is unstructured. So imagine, of all the data in the world, by far majority of that is only 24 months old. And so think what that, and the pace at which we're taking that data is still accelerating at an exponential pace. Not only because we're sort of interacting more online, but also because all these sensors have become incredibly cheap. So the number of sensors and so on is growing exponentially. So what that means is that effectively created a complete step function change in how we do everything. So and so data analytics has really grown from being heavily applied in technology businesses only to every single sector, right? From education, healthcare, to energy, to transportation. So it's really everywhere. And for example, in transportation, it's semi-autonomous and fully autonomous vehicles. It's using data analytics to figure out where do we actually place the charging stations so that the EV drivers sort of know, and what would be the price of charging the vehicle, because power prices go up and down all the time, and power prices are different in every single one of the tens of thousands of locations in US. So how does one predict that? So across transportation, and how do we actually optimize traffic? If you are UPS or FedEx and you have large fleets of vehicles, how do you take route information and how do you convert your whole fleet to electric? And how do you sort of incorporate the cost of power with all of the routes? So that's a huge data analytics problem. In energy, it's where do you place solar panels and how much power, how do I predict how cloudy it's going to be in different zip codes in US? That's a big data analytics problem. So it's really everywhere.
Well, we have quite a few questions coming in, so I think maybe why don't we switch to answering some of these. First, we have one from Joshua. Do you believe solar energy companies will one day overtake oil companies and users of their products and valuation?
Yes, that's an easy one. In fact, yeah.
Yes. Okay.
Exactly. I think that oil demand has peaked. And I think 10 years later, we're going to look back and we're going to look at oil the way we're looking at coal now. The amount of coal used in UK is already zero. In US, it's approaching very quickly falling and will go to zero. So I think we're past that point, and there are so many strong data points to suggest that to be the case. The biggest one of them is the economic point, right? So even if one doesn't care about the environment at all, from an economic perspective, we're already at scale from manufacturing perspective to manufacture enough electric vehicles, and with the full cost of ownership, which includes kind of owning the vehicle through the period of 7, 10, 15 years, the electric vehicles are much cheaper than owning a diesel or gasoline vehicle. And a majority of oil demand is still transportation. So transportation is really really transforming very quickly right now.
All right, great. We have a question from Bill. Ecoatm is a great example of a circular economy play. What is your outlook for other circular economy investments? How can you influence traditional investors to get excited about these opportunities?
So we think that that's another area where there's a major transformation, which is circular economy. And the reason why that's happening is because actually a combination of technology and data analytics enables that to happen today. And that was simply not the case 3, 5, 10 years ago. One example I'll provide is actually plastics. So you probably have seen a lot of plastics recycling bins and so on, but in US, only 8% of all the plastic is actually recycled. So 92% of all of the plastic that goes into either trash bins or recycle bins is never recycled. And the reason why that's the case is not actually because it's not economic to recycle it. It's not economic to actually figure out where all of these thousands or tens of thousands locations are, and for different types of plastics matching this demand with supply. And it's expensive to ship these in small volumes. So that's actually another very large data analytics problem to solve, which is how does one take all of the information in US, which no one has done, by the way. How does one take all of the information, all of the recycling and sort of waste facilities in US and create like a database, and based on that create business models? That's just one simple example of circular economy idea, that either that will happen or the plastic will be replaced by different kinds of packaging. That's also happening, by the way. For example, paper packaging is really taken off, and majority of the paper is fully recycled. So it's 100% kind of circular economy as well.
Interesting. I heard you pitch a problem out there, and I'm sure a lot of our future business leaders are already thinking through it. So that's good. Buddy wants to know, on your LinkedIn, it says that you can speak 4 languages. How has being quadlingual helped you in your career? Is it important to learn new languages?
So I think that it is important to learn new languages. I was, this was a question I asked when, I had my first kid. So I have two boys, and the question was, well, do you teach them only one language or multiple languages? I think early on there are a lot of studies that suggest that sort of the brain development is actually different when a person can switch between the languages. I have no idea if that's the case later on in the year, but from a career perspective, I think that ability to connect with people is important, right? And so we increasingly live in a global society. So the fact that one understands, even if you don't actually speak the other language that the other person has, but ability to understand how to switch from one thought process and one culture to another is actually valuable in helping one to connect with people. And I think language is, in a way, a gateway to do that. So even if there's no direct sort of visible sort of benefit, there's definitely a major indirect benefit of being able to think and put yourself in the shoes of another person, and particularly another person with a different background. Sorry, one last point on this, and it's important, is it goes back to diversity, right? Diversity is incredibly valuable because, and there's a great analogy in this in finance to other business aspects. So in finance, what's important, when one invests in stocks, there's the concept of there's sort of beta, so the stocks go up and down with the market, and then there's alpha. Alpha is really what's unique about that stock and why that stock will go up and down because of the unique characteristics of the stock. There's a similar concept in a team-oriented decision making. When you have a team of 10 people and all 10 individuals think the same, they're all from the same school, same background, and so on, you tend to get very similar ideas, right? So the incremental value of the 10th idea is not as high to you as if that person has a completely different background and therefore looks at the problem very differently. So when you have a team-oriented sort of problem-solving organization, it's very important to make sure that in your organization you have the diversity of everything, of thought process, of culture, background. All of that helps come up with an optimal decision.
So Ishan has a question. Since sustainable investment is about more than financial returns, how do you reconcile companies' potentially high social impact and ESG rating with a potentially lower valuation? And how do you attract clients when they are faced with potentially lower returns than other non-sustainable firms?
Yes. So we don't invest in companies that have lower sort of value, lower return expectations. So our specific strategy is actually looking at the whole energy space and saying, I have two choices. I can invest in renewables or oil and gas, and I will make more money investing in renewables because oil and gas is shrinking and renewables are growing and are more profitable. That's our strategy. But you're right that there are other strategies that actually try to sort of incorporate both the return and sort of environmental or social benefits. And there's definitely a calculus of what is the how much on returns am I willing to give up to either take more risk or accept lower returns. And I think that's also a good strategy to pursue, and there's definitely demand for that as well. The reason why we took this approach is we thought this is the most scalable approach. We are able to bring not only investors that care about sustainability, but also those who just don't care at all, but just believe that we can make more money, they can make more money investing with us than with, let's say, into oil and gas.
Somewhat related question from Avi. How do you help companies market sustainable products to consumers who prefer other products due to social or economic reasons?
So that's a great question, actually. So I'll give you one specific example, Ecoatm. So again, what do? We purchase phones, right? So what are reasons to sell phones to Ecoatm, sell used phones to Ecoatm? One is to get cash, right? Second, and there's very clear value propositions. Why Ecoatm versus others? You get cash right away. It's in a kiosk. It's in where you're located. But let's put that aside. The core value propositions, you get cash, right? Second is it's good for the environment. It's good for the environment because this phone should be fixed and be reused, right? And actually one additional phone that doesn't end up in a landfill, instead it actually ends up being used by someone else, means one less phone to be produced. So it really helps the environment. The third aspect is social. There are two social aspects. One is we actually give cash to lower income consumers that otherwise actually don't have. So our biggest demographic is people who make $15,000 a year in US. So a lot of that cash is spent in groceries, for example. So there's definitely a social aspect of that. And then on the other side, that phone actually ends up mostly in emerging markets because there's such strong demand, for like 5-year-old iPhone 5, let's say, versus sort of the alternative that does. So it actually increases the affordability. So depending on, so we have a very data-driven approach of acquiring customers. Depending on which customer we're trying to acquire, we're going after either this is good for the environment, this is the sort of social aspect or economic aspect, or some combination of the three. So it's a traditional data-driven customer acquisition strategy of figuring out what is the channel through which we're acquiring. What does the brand stand for, Ecoatm? And if I'm acquiring a certain customer that cares more about cash, then the marketing is going to be focused on that versus sustainable. On sustainability and environment, we measure with high precision each phone type. What are the actual positive environmental benefits of recycling or recommercing? And we share that as well with the consumers.
Okay, we have a question from Kanav. Would it make more sense for the U.S. government to invest more into electrical passenger vehicles or electric public transportation, buses, trains, and so on?
Both make sense. Both make sense, and actually it is one of the investments that we're currently working on, and hopefully we'll make next month, is one of the private companies that produces commercial electric vehicles. So we think that both passenger and commercial vehicles are very quickly moving towards electrification, and U.S. has really an opportunity to be a leader in that space, to really create the supply chain and all these businesses. They are happening organically. Whether or not we have federal government support, there's still a lot of private sector support combined with state support. So California is leader in the U.S. in terms of supporting electrification of transport. California has very specific subsidies for passenger vehicles, for charging stations, for electric buses and trucks and so on. But this trend is happening with or without government support.
What do you see as a timeline for that? I mean, when is it going to be a reality?
It depends where. In some areas, it is a reality today. So you look at a country like Norway, where the sales are electric. You look at California, it's already double digits, over 10% of the vehicles, and that number is growing very quickly. You look at the buses in US, we're already talking 10% of buses are electric. So it's actually happening quite quickly, and the pace is exponential, right? So when you go from like 1% to 2%, it's not as, you don't feel it as much as then you sort of jump to 4 or 6, and then you jump to 12. And you may look at it and say, well, you're still at 12. It's a small number. But, we think over 50% of buses, for example, in U.S. sold by 2025 are going to be electric. And the trucks are transforming very quickly. So we think those trends are exponential. We think that within a decade, almost all of the new sales are going to be electric.
Okay, great. Let's see. All right, I love skills questions. Here's a good skills question from Ishan. What secondary non-finance skills do you recommend learning in college to remain competitive in the world of finance and investing?
Definitely data analytics. I think understanding finance, data analytics, and software are kind of the three big, incredibly strong skills, right? That's just high level. Then if you kind of dig deeper within business, for example, business, there are obviously finance, marketing, and so on, but digging deeper, it's actually behavioral finance, or you sort of how does one actually organizational skills, so strategy, how does one actually manage a large number of people, how does one negotiate something, how does one convince other people to do things. All of those are sort of important. But I would say that if I were to start from scratch and pick areas, I definitely would say finance, data analytics, and coding would be the three.
Okay, great. So this question's a little bit of a departure from Stephanie. You earned your BA at 19. Would you send your kids to college early if they are academically advanced?
Yes, absolutely. Why not? I think if there is interest, then that would make a lot of sense. And also, the education itself is changing, right? So like the ability to now take classes online and so on, I would definitely want my kids to take full advantage of the opportunities that, again, institutions like UPenn provide. All of these new online classes, which I hope are going to continue to actually scale.
Do we have any others? I think that's it from the students. I'm curious, you've had such a dynamic and rich career thus far. How have you come to define leadership?
So I think leadership is having a vision about the future and then convincing other people to really follow that vision, right? And there are different ways of actually executing that. Sometimes it's by example, sometimes it's, but the point is to really, we live in the world of uncertainty. I think one of the quotes that I was looking at is actually the only thing that's certain is uncertainty, right? There's uncertainty. We don't know the future, but that we have enough data points to have a vision of what the future could be, right? And I think it's important to have something, to have some sort of vision about the future and pursuing that vision. And that vision needs to be exciting enough, big enough, where other people would sort of follow that vision, right? And so to me, leadership is being able to not only come up with what the vision is, but also create circumstances where other people can join you and follow that vision. And those circumstances could be in different formats. You could be effectively speaking about something online and have people follow you, or you could create a business, create an organization, raise money and hire people, or you could create a nonprofit and do that, or you can go to politics and do that in politics. But what all of these have in common is that people would have, at the beginning, would have a long-term vision and would be really genuinely passionate about it and be able to convince other people that this is a worthwhile effort to join them.
Whenever I hear the word uncertainty, I immediately think of risk. So where does risk fit into that scenario for you and for others as well? I mean, different people have different appetites for risk.
Risk fits in qualitative and quantitative ways, right? I think that just a couple of anecdotes from a personal qualitative perspective. I think when the opportunity is big enough, one needs to pursue that, right? And it's very difficult. I would say that actually one of the most important things about risk is to actually measure it properly. Because status quo often creates an illusion of lack of risk. But when you actually have a changing environment, that actually changing is the less risky thing to do. And one of the examples of that is actually oil. Oil industry is a great example, right? So oil was at peak at $150, went down to $80 and $60 and $30. Now it's back to $40. There's still a lot of questions around the future of oil, but it's very clear that this is it's a dying industry. So one can take status quo and say, well, oil has existed for the last 10 years. It's less risky to continue doing this. But in my opinion, it's actually riskier to stay in the oil industry because there's such big change. So one way or another, uncertainty exists, right? So we just have to acknowledge that uncertainty exists. We have to establish that the future is different than the past, have a vision about the future, and based on one's vision of the future, come up with a way of reducing risk, but also increasing the outcome, getting what you want, right? So that's how I think about it qualitatively. And quantitatively, we measure it all the time, right? It's just pure kind of statistics, thinking about what's the probability distribution of various types of outcomes, and how do we actually, what kind of data we have, we can rely on, what data we have, we cannot rely on, because there's major changes in how the future is going to look versus the past. And it's just traditional kind of data analytics methodologies we use to measure the range of potential outcomes.
We've arrived at the end of our time together. Maybe one last question would be just what advice would you give to future business leaders? Maybe something that you want to take away from your own career. What would be your parting shot to them?
I would say that the optimal outcome is to figure out what you're excited about the most, what you're good at the most, and sort of really find and what is needed in the marketplace from that there's actually business. The best businesses are a combination of those three, where there's very clear demand for this kind of business, what you are as an individual are really excited about, and what you're good at. However, if you can't find all three, I would recommend to just pick two, which is what you're most excited about and what's needed, and then really work on becoming really good at it. Because I really believe that one can work hard enough to become good at really anything. So it's really a function of solving for those first two pieces, which is what is the passion, and is there actually an economic need for that passion to be a business? And if those two are there, then that's worth pursuing.
Well, thank you so much for joining us in the gym today. It's been wonderful having you.
Thank you very much for your time.
And I encourage everyone who's watching to join us for more career chats. We have several next week, and we look forward to seeing you all again. Thank you for your time.